Welcome back to the Delphi Economic Forum, and thanks for joining us today for a discussion on the political and economic implications of the 2020 presidential election here in the United States. I'm Endy Zemenides, Executive Director of the Hellenic American Leadership Council, joining you from Chicago, and pleased to be moderating a discussion between the dynamic duo of the Financial Times here in the United States, Ed Luce in Washington, D.C., the U.S. National Editor and Columnist, and Rana Foroohar, the Global Business Columnist for Financial Times. They are, for those of you really interested in what they call power and wealth in Trump's America, you should be reading their biweekly swamp notes in the Financial Times, and a few, I think, prescient books. Ed, around 2012, wrote, Time to Start Thinking about the decline of America. Some people called it Time to Start Drinking. And then also wrote The Retreat of Western Liberalism, which we'll get into this. And Rana has two amazing books on Since the Economic Crisis, Makers and Takers, about the finance industry in the United States, and now Don't Be Evil, about big tech. And frankly, they become even more interesting given this economic crisis. But let's get in right away. I'd love to hear how both of you think history will remember 2020. Ed, and I mentioned The Retreat of Western Liberalism. You start that book off with your personal experience in the fall of the Berlin Wall. You've written about the promising march of Western liberalism afterwards and the decline of 2011. Noted 2016 as kind of a low point in that retreat, primarily because America couldn't be pointed at as a democratic example or a Western liberal example anymore. If I recall correctly, an alternative title for your book was The Collapse of Western Liberalism. So are we on the road to collapse or rebound?
Well, that's a good question. First of all, thanks so much, Andy, for having us on. Great pity that we're not physically in Delphi, a place I've always wanted to visit, though I'm holding out hope we will visit next year or the year after. So a pleasure to be here. In terms of whether we're heading towards the collapse of Western liberalism, well, my publisher wanted me to call the book The Retreat of Western Liberalism, wanted to call it The Collapse, and I resisted because I believe that the events of 2016, Brexit, Trump's election, and other disturbing trends were a danger signal, but not the end of the game. And so I resisted and retained retreat. And retreat implies the possibility of regrouping and returning. So I would stick to that title. If, however, Donald Trump wins in November, I think I would revisit it. Just bear in mind, and you know this very well, that we're in the middle of a pretty badly managed pandemic here in the United States. Today, probably sometime in the next 2 hours, the number of dead will exceed 100,000. And the president is attempting to leverage that situation to suppress the vote in November. He just half an hour ago tweeted that mail-in ballots, absentee balloting, is an instrument of fraud, and that mail-in ballots should not be allowed anywhere. I mean, he's not going to be able to stop it from happening in many states, perhaps in most states, but there's no doubt about it that the president is, in a very concerted way, attempting to reduce the vote in November. So if on that basis he manages to get re-elected, and also on the basis that older Americans, those over 65, those most vulnerable to COVID-19, should essentially offer themselves as sacrificial lambs to the larger economy, then a Trump re-election in those circumstances, I think, would be a very powerful indictment against the wisdom of democracy and a very large public relations victory for the Chinese sort of ideological competition to democracy. I don't expect Trump to win. Before the election, before COVID-19, I would have given him a 50-50 chance of winning in November. Now I put it at 40-60. But nevertheless, if he did, then we'll be moving more from retreat to collapse, in my view.
Rana, kind of a similar question, but from the economic standpoint, makers and takers. I'm looking forward to your next book after this crisis, because makers and takers captured really well how we got to the 2008 financial crisis and what we didn't fix. And frankly, it seems one of the problems with what we're dealing with right now and any economic rebound is the problems of wealth inequality, power inequality, financialization. They may be even more rampant than they were when you wrote Makers and Takers. Will this time be any different?
A big question. I mean, that's kind of the $64 billion, maybe $1 trillion if we're counting global debt, question out there right now. Makers and Takers actually, I wrote it after the financial crisis, as you say, but the line that I began from was really around 1979, 1980. It was the beginning of the Reagan-Thatcher revolution. And that was a big pendulum shift. Economic time cycles, you always get this big pendulum shift between power being in the public sector and power being in the private sector. And if you time warp back to 1980, you can argue that the public sector had too much power. That's why you had the Reagan-Thatcher revolution. Now, what happened after that point was that politicians said, look, we're going to let the markets make the decisions. We're going to deregulate. We're going to free up the financial sector. We're going to unleash animal spirits. And there wasn't sort of one silver bullet change, but you had 40 years of policy changes that essentially allowed the financial sector as a whole to become many times the size of the real economy. So about 4 times or so the size of the real economy before COVID hit. So you have financialization, you have finance becoming the tail that wags the dog of the real economy. And part of the process that allowed that to happen was the Federal Reserve keeping interest rates low. And if you look at you had a big debt bubble, it burst, but what was the solution? Policy makers around the world, in Washington and Brussels, were gridlocked, so you didn't get a huge fiscal stimulus. You got some stimulus, but really the ball was thrown once again to the world's central bankers, and central bankers can encourage lending and they can push up asset prices, but they can't really change the story on Main Street. They can control what happens on Wall Street to a certain extent, but not Main Street. So you had this cycle of the problems of debt being solved with easy money monetary policy, which allowed for the creation of yet another debt bubble, the corporate debt bubble. That's where you start to collide the problem of financialization with COVID-19. And many of us that follow the markets thought that there was going to be some kind of major correction. We didn't know it was going to be a virus. I mean, I would have said that it might have been something coming off the back of the U.S.-China trade war, perhaps tensions in the South China Seas that went hot. Who knows what it was going to be? But it was going to be something. And markets were going to correct, and the world's biggest corporate debt bubble was going to burst. That's what you have now happening just as you have a global pandemic, which is locking down the entire world's economy. So unfortunately, what you've gotten, I mean, fortunately or unfortunately, depending, you've gotten a short-term fix, again, in the function of the Fed coming in, papering over problems, putting a lot of money out there into the markets. But the question remains how far that can go. And you hear Powell, you hear central bankers all over the world saying, look, we are really pretty tapped out in terms of what easy money can do. And in terms of what central bankers can do, we need a Main Street recovery now. We need something to happen at the fiscal level. And so that's the big question. That's where we start to go into what's going to happen in November and what various factions, particularly if we assume a Democratic victory, what various factions might do.
I want to stay with you. The title of this panel is the political and economic implications of the 2020 election, which were always going to be serious, even before the COVID crisis. Now, COVID has put all these considerations on steroids. But when it comes to economics, as you laid out both in Makers and Takers, one of the problems with the last response to the last crisis is that it benefited the takers. It benefited a lot of the people who were responsible for the crisis. And given that they still are calling a lot of the shots in terms of economic policy, is there a prospect of this changing?
It's a great question, and I'll play off of something that Ed said. I mean, let's assume for the moment a Democratic victory in November, which I think will happen as well. There's a big fight going on economically within the Democratic Party right now. There are some folks that say, look, we have to just raise taxes on the wealthy, and particularly on wealthy companies. And that's where you start to get into money politics in Washington. I mean, before COVID-19, a year or two ago, McKinsey Global Institute actually did a very interesting study looking at the amount of corporate wealth that was concentrated in a particular number of companies. And you had 80% of corporate wealth being concentrated in 10% of companies that have the most personal data and the most intellectual property. So these are the big electronics and IT giants, the platform tech companies, the Amazons, the Googles, the Facebooks. I think you're going to have to look very hard at higher taxes on these kinds of corporations, possibly digital dividend taxes, something that essentially starts to take some of the wealth that has gotten so concentrated and is even more concentrated now, will become more concentrated as we shift kind of overnight into a virtual economy, which we thought was going to take maybe, 5-10 years. Now it's just happening overnight. So there are certain policymakers that say, all right, we're going to have to raise taxes on those rich and powerful entities, people and companies. But there are others that are saying, look, that's just too hard. I mean, these are some of the major lobbyists in Washington. Google and Amazon, by various metrics, are the two largest single corporate lobbyists in Washington. How are you going to be able to raise taxes? How are you going to be able to redistribute when you have that kind of money politics happening? So there's another camp, those that would like to see something called modern monetary theory, MMT, which is basically saying, you know what? We're going to let the Fed backstop government spending. We're going to let the Fed and Treasury work together. The U.S. can print as much money as it wants, and we're going to use that to fund things, not stock buybacks and financialization and rewarding the takers, but we're going to try and reward the makers. We're going to try and do a Green New Deal, or we're going to rebuild infrastructure or rural broadband. I mean, many, many laudable ideas. But the question is, once you start to get that politicization of the money supply, does the U.S. start to lose credibility as a safe haven, as a global reserve currency? This is all happening at the same time that you have China going its own way, Europe possibly going its own way, the move to a bipolar or even a tripolar world that I think is going to raise big questions about whether we may be moving to a post-dollar world.
Yeah, Ed, I want to get on the political implications and follow up a little bit on your distinction between collapse and retreat. I mentioned the column Swamp Notes, and that's a little bit of a play on DC. You guys are poking fun on DC as a swamp. You're also on a great podcast, which I recommend to everybody, called Deep State Radio, and again, you're having fun with these accusations of deep state. But one of the problems, it seems, in American democracy is we're undermining kind of the institutions of the media, of professional bureaucracy, of government. You had a great FT weekend piece inside Trump's coronavirus meltdown, and it seems that the story was professional government is being undermined by the politicos, which brings me to this question. When you wrote Retreat, you spoke about Francis Fukuyama's quote about a democratic recession, but you're saying maybe we're getting to the point of a democratic depression. Are we at that point right now?
It's getting close. It's again a very good question. The person who coined democratic recession, although Francis Fukuyama has used it, is Larry Diamond, also from the Hoover Institute at Stanford. And the reason he coined it is that since 2000, the world has lost about 25 democracies, serious democracies. Even Russia was sort of on a trajectory towards something approaching oligarchic democracy in the late 90s, and that's clearly no longer the case. Thailand, you can mention countries all over the world, but most importantly, countries like Hungary, within the European Union, that were part of the peaceful collapse of the Warsaw Pact in 1989, 1990, are no longer really bona fide democracies. And over the same period of time, the United States has lost interest in promoting democracy. Now, partly because it over-promoted it with wars of choice, such as the 2003 Iraq War, and discredited democracy promotion in the process. But since 2016, with the election of Trump, because it's completely lost interest in the political character of other countries. It believes America first is a philosophy that believes that regardless of type of regime, other countries are out to rip America off. And so you have, I think, really the philosophical undermining of America's post-war stance. There was a very famous book by Dean Acheson, America's great, the Truman administration's great Secretary of State. And his book was called Present at the Creation. And that was the creation, really, of the post-war order, the Bretton Woods, the United Nations, international law. What we're at now is present at the destruction, I think, of that post-world order. It's a slow destruction, but the re-election of Donald Trump in November, which, as I say, is it's not probable, but it's certainly a plausible scenario, would, I think, lead to America's withdrawal from the WTO, probably from NATO. And I think the accelerated collapse of what Dean Acheson, of what America created in the 1940s and 1950s. And that includes the attraction and the incentive of democratization around the world. America has lost interest in that project for good and bad reasons. COVID-19, I believe, is accelerating the relative attraction of the Chinese autocratic, command administrative, whatever you like to call their model. It's also accelerating China's largesse in terms of aid it's giving to other countries. America's really not on the scene. There's been no American global leadership during this historic pandemic. Again, that's new. Whenever there's a natural disaster or a crisis, America is first out of the starting blocks, and it creates global consensus and emergency response to tsunamis and Ebola and all kinds of disasters in the last few decades. Again, this is the first time America has not just not led that, but in which America has needed help. So we're kind of at a turning point, and I think, as I say, I hate to sound like a stuck record, but if Trump's reelected in November, I believe that will convert Fukuyama's recession into a democratic depression.
Let's stick with that a little bit because we're talking about actions that come from top down. I think there's a little bottom up feeling in the American populace that we have to examine, both in the government end and the business end. You have noted and regularly say, Ed, that trust is the glue that holds democracy together. You both talked about last week in Swamp Notes that the governments worldwide that are doing the best in terms of coronavirus response are the ones whose populace has a high degree of faith in government. We clearly don't have that in the United States. Is this we see that the approval rating of Congress, the right direction, wrong direction, has been in wrong direction for a long time. The president's numbers are underwater. Is this something that can be changed, or are we going to have to? Is it going to be a long haul for the American political establishment and government establishment to regain that trust?
Look, it's a very important point because the governments that have done well, as you say, Endy, so far in relative terms, in terms of handling the challenge of the coronavirus, are countries like Taiwan, Singapore, South Korea, Australasia, New Zealand and Australia, Germany, most of the Nordic countries minus Sweden. And if you look at opinion polls in those countries over time, there is a far higher degree of trust in government in places like that than there is in the English-speaking democracies other than Australia and New Zealand. Canada has done relatively well. So when I say English-speaking democracies, I'm basically talking about America and Britain. Very low trust in Italy, pretty low trust in Spain. So you begin to see a pattern there that one of the key elements of managing any crisis, but particularly one that involves millions of individual behaviors, like responding to a virus, to a pathogen, is trust in the communication you are receiving from the authorities, that you believe that what they're telling you is true, credible, and in your interests and in everybody's interests. Now, if you believe, as many people in America do, that vaccinations are a plot by Bill Gates in league with pharmaceutical companies to inject microchips into your bloodstream so that he can extract your data on the quest for world domination, then you are, to put it mildly, in a state of acute mistrust and distrust of what you hear from people in authority. And that erosion of trust has taken many decades. It doesn't suddenly arrive in the last 3 years. It helped Trump get elected. He played on it like a violin in 2016. But if you look at the charts, declining trust in government it's been going down for 20 or more years in the United States, in Britain. It's been going down everywhere, but much, much steeper and further in the US, Britain, and a few other democracies. And as you say, trust is the glue of democracy. Once you lose trust, you lose faith in the ability to govern collectively and make wise and good choices. And we are in that situation now with half of America's states lifting the lockdown against scientific advice, against the White House's own very moderate, diluted guidelines, when they've got rising rates of infection in the last 14 days. You've seen the pictures in the last 2-3 days over the Memorial weekend of people socially crowding in public swimming pools and in different venues in complete defiance of all the advice they're hearing because they don't believe it. It's very hard to govern in those circumstances.
Rana, there's an economic flip side to this. For the first time, polling is showing, as Ed said, the trust in government has been slipping for a while now. But for the first time, it seems American trust in business and in its corporate leadership has dipped below that of government. And we are already seeing it. People worried about big business at the expense of small businesses that are shutting down. We've had the scandal. Some people may not realize it, but big businesses getting the Paycheck Protection Program benefits that people thought were just going to small businesses. Is there going to be the requisite trust to do that type of economic restructuring? Or after the last crisis, everybody still thinks Wall Street got bailed out, but not Main Street. They still talk about big bankers. Now it's going to be about big tech, which I'll have another question for you. But is there going to be that trust in corporate America to effectuate the economic restructuring that you talked about?
Well, it's interesting. It's a real chicken and egg cycle problem. I mean, people think that Wall Street got bailed out because it did get bailed out, 2008. That was the problem of moral hazard. And I think that we've never really recovered from that. I think one of the reasons that we didn't have a really sustained recovery is we didn't get a clear narrative about what happened in the financial crisis, who was to blame. We didn't get equal pain being shared by the large creditors, by the big banks, and by homeowners. You had a lot of individuals losing their homes and then giant private equity firms coming out and buying them on the courthouse steps and then flipping them over the last 10 years for incredible profits. Some of those same private equity firms are now in line to get bailed out in the current stimulus package. So we are really at a huge inflection point here. And I think that businesses realize that. They realized it a little late in terms of this bailout. You now see a lot of big businesses, some big universities saying, okay, we're going to give our stimulus checks back under public pressure. But there's a bigger issue here, which is, are we going to allow the big to get bigger? And what does that mean for the economy? So before Corona, even before the financial crisis, you did have this trend, something that was encouraged by globalization, encouraged by financialization, encouraged by tech-related job destruction of the big getting bigger. That tends to create a superstar economy, all of those three things. Add to that the easy money monetary policy that I talked about, which encourages companies to take on a lot of debt, and you get these kind of giant bloated corporations, some of which, interestingly, are now going bankrupt. You have these fallen angels, companies that used to be blue chip stocks that are now going bankrupt, having to be bailed out. So we're at a big turning point. We will have some tech superstars, some financial superstars, some big players in the healthcare sector, I think, getting bigger. And I do think that that's a problem for a couple of reasons. One is a labor issue. I mean, as we shift really from a tangible economy, something that you can taste and smell and feel, made up of widgets and services, to an intangible economy made up of data, essentially. How much data can you mine? How many ideas can you monetize? That's simply less labor intensive. And so we need to have a real rethink about how our economies work, particularly in the rich world. Companies, I suspect, are not going to be replacing a lot of the jobs that are lost. There's been some interesting research showing that as many as 42% of the current layoffs that we're seeing are going to be permanent. Companies are simply going to shift. They're going to replace those jobs with software. They're going to do more with less. You're going to see entire sectors being reshaped. The work at home revolution is going to change real estate. That's going to change what cities look like. I mean, there's so many things that are up for grabs right now. But the other question is innovation. Innovation tends to happen in a decentralized environment. It tends to come from individual academics, from small and mid-sized businesses, rather than big companies. And if we want to make that next productivity leap and really have a Main Street recovery, we're going to need to figure out how to spread that pie a little more evenly.
Yeah. A part of the pie, you talked about tech superstars. The news this morning is that Attorney General Barr is looking to bring a case against Google this summer. There are several state attorney general cases against big tech. The House Judiciary Committee is ending I think in the next month or so, is wrapping up their investigation of Amazon, Google, Apple, all of them. One of the big complaints about the recovery of 2008 is that big banks were not broken up. Is there any scenario in which there's not a serious move, both from left and right, to break up big tech and big banks?
Interesting question. That, I think, starts to get into who wins in November. I think if you get a Biden administration, particularly if you got Biden with, say, Elizabeth Warren on the ticket, absolutely we're heading for breakup, or turning some big tech companies perhaps into public utilities. One can look at a company like Amazon and say, well, they're really essential now. maybe they should really be essential, kind of like a utility, become state-owned. You could actually say the same about Google. And in fact, in my book, Don't Be Evil, I go back and I look at the original paper that Larry Page and Sergey Brin wrote about Google in 1998. They were actually advocating for a search engine in the public interest because they thought that there would be problems between the needs of users and the needs of advertisers in this new sort of world of surveillance capitalism. So I think with a Democratic administration, you're probably definitely going to see a continued push towards break up big or turn some of these companies into public utilities. If you have a Trump administration, it starts to get interesting because there's a couple of intersecting vectors. One is this sense that we are in this existential war for the future with China. And there are some, both on the far left, but also on the far right, that say, well, in that war, you need to have sort of U.S. tech national champions. And so companies like Google or Facebook or Amazon are our national champions against Baidu and Alibaba and Tencent, the big Chinese tech giants. And so the big should get bigger. That worries me, A, because I think that kind of nationalism is very dangerous, but B, because I think that's not really where innovation comes from. I think that the advantage of the U.S. has always been decentralization. It's always been really letting ground up innovation happen, best ideas come forward. And I worry that you're going to see the big getting bigger, and that's going to squash innovation, GDP, and it's also going to create more labor constraints and populism.
Ed, we got a question on coming in from the audience, following up on your erosion of trust. It's been the glue of democracy. The erosion has been going on for a few decades. As this was a gradual decline, it's safe to assume that any reversal will also be gradual. What is it going to take to reverse this trend? And to combine it with what Rana just addressed, do you think taking whacks at some of these major industries and putting Amazon's feet to the fire, or Apple's, or buybacks, are we going to need kind of an FDR traitor to his own class type movement being established in the U.S. government?
For sure. I mean, if we could legislate for an FDR, then I'd be sleeping very happily every night. But I guess if you think back to 1932, you look back on what people thought about FDR, they didn't expect much from him. He was all things to all people. He was a politician. Nobody really knew what to expect from an FDR administration. So in that respect, maybe Biden is FDR. But the decline of trust in over several decades is not something irrational. There are reasons why people have lost trust. And Rana's been alluding to some of them very well. In the system of meritocracy that we're all told we're living in. Because I think people have experienced, they've been told inflation's dead, but they see healthcare and education become more and more unaffordable every year. They were told that Saddam Hussein was hand in glove with Al-Qaeda. They then discovered that war was undertaken on false pretenses. They were told that the market reflected rational pricing and all information in 2007, not just by analysts on Squawk Box, but by the chairman of the Federal Reserve, by Alan Greenspan, then by Ben Bernanke. They were told by the experts things that they then discovered very much not to be true. And so I think there is some well-foundedness to the decline of trust in public institutions, which begs the question, what kind of event or leader would it take to start rebuilding that trust? Now, I think if pandemics have any silver linings, they are an opportunity to speak plainly to people. And in countries we were talking about earlier that have done well, Greece is another. It's the one you would not have predicted. Greece is another. Now, Greece, from what I understand from you, Endy, but also from what I've been reading, the government there, has given I forget his name, but a leading public scientist, a lot of airtime, The government has made it very clear it's listening to science. It acted early in terms of imposing social distancing. But it also admitted, and this is really important, and this is true it's true in many places, admitted what it didn't know. This sort of blustery false confidence that you get out of, say, Boris Johnson or Donald Trump. There's going to be a vaccine in July. And now we've conquered it. It's time to declare victory. It's been a great success. We now know we're past this. People know this is nonsense. People like being told that by their leaders that here's what we know and here is what we don't know. That's the kind of thing that makes them trust you. And I've used this analogy before, and it might be trite, but I think it's actually quite a good one. When you're sitting on that plane, in my case, it's usually United, and they say, oh, we're going to push back in 15 minutes, just a minor delay. And then an hour later, they come back on and say, sorry about that. We're going to be pushing back in 20 minutes. That was just a little hitch with paperwork. And then 2 hours later, they come on and say, by that stage, not only have you stopped believing them, but you're angry because your expectations are not being managed. So I think, if we're going to start rebuilding trust, we need somehow to find leaders who have the guts and integrity to tell us what we know to be true and what they don't yet know. And bring us in on the conversation. It's, as I say, you can't legislate for that kind of politics, and you can't legislate for that kind of leader. But that's the sort of quality we are desperately missing in democracies like America and Britain. We are cynical for a reason.
I want a little diverge, but stick on this trust question and talk. All three of us, we've been talking about what our kids are going to do when the school year starts. And Ed, you've written a lot about civics education, right? Besides the leadership, there are structural problems here, right? We don't do civics in the United States. We don't do national service. Right? We have, we're talking about people taking gap years, or some people who can't take gap years. There's these stats that come out every year, how few people in Congress have served in the military. It used to be everybody in Congress served in the military. Now, very few have. There's congressmen who actually don't even have U.S. passports, right? Not because they're not citizens, just because they don't want to go get a passport. What are certain structural fixes that the United States has? Because, you can go to some states here, and we all happen to be in blue states, but there are some places that we can go, and you guys travel for your reporting, that you think you are in a way different country. Ed, since I'll stick with you, and then Rana.
So we've had in the last sort of 10, 15 years this great push for kids to learn STEM, to learn science, technology, engineering, and math, and computer coding in particular. And I think that's actually been misemphasized. I think it's the kind of thing that elites recommend for non-elites kids. It's not what they do with their own kids, except for maybe, computer coding in summer camp for a week. What the change of technology and the automation of routine tasks is doing is actually bringing greater returns to the kind of soft skills and intuitive intelligence and EQ and communication and interpersonal skilling, human judgment, that you actually get better from humanities. Now, of course, you need both. You need to have kids who are good at math, don't get me wrong, and science. But I think you need to do joined up learning. We talk about joined up government, a phrase Blair invented in Britain. You need joined up learning that's not siloed, and that teaches kids how to think. And I think, if there's one sort of great lesson in the last half generation in American politics, with the decline of civics, the fact that civics isn't tested. So teaching to the test occurs for math and English, not for civics, is that we've seen a plummeting in political literacy in the United States and in Britain. And countries that have done relatively well, like Germany, have very, very strong civics in their education system for obvious historic reasons. They don't see politics as a branch of the entertainment industry. It's a far more serious business than that. And I think we could learn a trick or two from countries that suffer less from populism and from anti-politics politics than we do. But this isn't, an overnight panacea. This is the kind of thing that takes a long time to seep through into the kids who become adults. And so I don't have a magic. I don't have the kind of solution that Trump would. I don't have an anti-malarial drug that will make people politically literate in the next week.
Rana?
Yeah, I'll jump in. I have a number of thoughts. Well, for starters, let me just, say that for my sins, I grew up in a red state. I'm saying that ironically. I was raised in rural Indiana, and I had an interesting upbringing because my father is an immigrant. He was a Turkish immigrant who came to study in the U.S., got a PhD, did a small startup business, which turned into a mid-sized manufacturing business supplying the auto components area in the Rust Belt. And so I kind of really saw that whole trajectory from the 1980s onward of the rise and fall of American manufacturing, of the end of vocational training programs. When I went to high school, Frankfurt Senior High School in Frankfurt, Indiana, there were shop programs, there were training programs. Kids went out and actually had marketable skills. I don't think that that's a bad thing. We actually had an interesting shift. It was driven in part by liberals who thought that this kind of more Germanic vocational training was classist, was penalizing kids, kind of tracking kids too early on. You can make that argument, but I'll tell you, an argument that I would make right now is we have way too many people spending way too much money for four-year degrees that will mean nothing. And I'm someone who's getting ready to spend a lot of money for my daughter to go to college in the fall. Hopefully there will be college. I hope I'm not going to be paying full freight for Zoom classes, I'll tell you that. But I think that we're about to see a major sea change in American education. I wrote a column actually a few weeks ago looking at how there is going to be an immediate hollowing out of the middle. So you had over the last 20 years or so, when you have this kind of ideological revolution that, all right, everyone needs to go get a four-year degree because that's the future. You had a lot of kids taking on a lot of debt. You had a lot of schools building, expensive facilities, often going into debt themselves to do that, to try and attract full fee paying students. You had an influx of foreign students, which is a great thing. My dad was one of those kids. You stay, you start businesses, you want those kids. But all of this created a bubble in American education. And so right now, right before the pandemic hit, you had a lot of kids coming out of very high level four-year colleges that have great skills, and you have some coming out of really high quality community college programs, or programs like the one my daughter went to in New York City. She went to Bard High School Early College, which is a program that you graduate in 4 years with 2 years of college credits through Bard, which is a liberal arts college up the Hudson. I think that those are great, but you have a lot of kids in the middle that have paid $70,000 and are in debt, huge amounts of debt. The average college graduate ends up with maybe $30,000 of debt. So that's a headwind to economic growth. The Federal Reserve has actually flagged student debt as a major mid and long-term headwind to growth because you have an entire class of consumers that can't consume. They're paying off student debt. They can't buy houses. They can't buy cars. So that's a major shift. Now what you're going to see is a lot of those middle range colleges that were charging too much for too little are going to go bankrupt. You're going to see a lot more online education. That's going to be a mixed bag. Some of it will be great. Some of it will be not so great. You're going to have the colleges that are left, particularly at the top end, coming under pressure, I think, particularly if we saw a continued effort, in a Trump administration to try and keep out foreign students. I think you're going to have those colleges under pressure to really prove their worth, to prove that they're not just a credential, particularly in an era of virtual education. So we are at a major turning point. I think that this is an inflection, really very much like the post-World War II period when you saw a revamping of secondary education. I think you're going to see an entirely new system emerging within the next 10 years or so for all kinds of reasons. The current one was too expensive. It wasn't connecting educators with job creators, and we have a group of kids that are not coming out with the skills that they need for the 21st century workforce.
We're getting a lot of questions about, what we're going to look like coming out of this. And there are some areas of agreement. I mean, Ed, when you were doing your book tour, you were talking about, hey, infrastructure, right and left agrees on it. Of course, that's when Steve Bannon was still in the administration. And, Congress is telling me they've never had so much agreement over infrastructure. Now, I don't know who is the holdup, but we'll see that soon. But Rana, let's start with this one. Does renewable energy fit into this infrastructure and economic recovery? You referred to the Green New Deal. Is the green economy more attainable after this crisis or less because of the collapse in oil prices? What are the major obstacles of getting there?
Really, really interesting question. And there's so many different vectors there. You've got me thinking, first of all, about the fact that you're probably going to see a move away from a dollar economy and oil. You're going to see the collapse of shale. That's going to have lots of consequences. But let's put aside kind of petropolitics for the moment. A Green New Deal is such a no-brainer in terms of knitting together what's needed with what's available. So what's needed is a Main Street recovery in which you put people to work. You've got to get jobs for people, in which you encourage some kind of productive bubble. And when I say productive bubble, I mean a kind of the kinds of bubbles that only a government can encourage. There's all kinds of speculative bubbles, market bubbles that we've been talking about. But governments can create bubbles too. The government actually funded the internet. The government created the seeds for the tech revolution that is in our pockets today, that has enriched companies like Apple and Google and Amazon. That all came out of the U.S. Defense Department. You had a productive bubble being encouraged around the turn of the century by investment into railroads in Europe and in the U.S. So governments can kind of plant the seeds and start to invest in areas that individual companies or even individual industries might not go themselves. And I think that, it's hard to know what the new thing is going to be, but if you could make a bet, you would probably make the bet on green tech, clean tech as being that thing. I mean, we just know that we need to move to that future. And so I think that some kind of industrial policy based around, say, employing some of these laid off workers to retrofit houses with solar panels, or to get involved with the deployment of wind technology, knitting together educators and job creators in different regional hubs to make that happen, allowing for a lot of leeway in terms of how these things play out locally, but having some kind of organized plan from the top down at a national level, I think would be a great idea.
And talk to us a little bit about the political will and the public opinion around some of the measures that Rana is talking about, whether it's Green New Deal, raising taxes on the wealthy, kind of decoupling Wall Street and Main Street, breaking up big banks. We would have bet 2 years ago, well, there's not enough political will, right? There's always, you need a sea change in politics. Is there a sea change coming because of this crisis? And will the public be cheering for a lot of these moves?
There could be. I mean, in politics, things are impossible until they happen. And, then we consider it to have been likely all along, particularly us in the punditocracy. So one of the things Franklin Roosevelt did was a civilian conservation corps to put people to work during the Great Depression. We've got a demand in the United States for 300,000 contact tracers. That's a lot of people. It takes some training. They are desperately needed. The more we can get up and running and working, the more quickly we can, the more quickly we can ease lockdowns, because we can monitor much more accurately. So that kind of thing, I think, could be done. If you had a different president right now, it would be being done. The WHO has just predicted that we're going to have not just a second wave of coronavirus this winter, but a second peak. In other words, it's going to be worse. So I've no doubt whoever is being sworn into office next January, and particularly if it's Biden, will see crisis as opportunity. This is the kind of situation where you can make changes that might not have been conceivable a year ago. And perhaps because Biden is seen as a relatively centrist, relatively corporate Democrat, he'd be better able to push through things like this than somebody who was from the more radical Warren Sanders wing of the party. That's sometimes how politics works. You call it the Nixon goes to China effect, if you like. So the art of the possible and the radical uncertainty of this situation, a combination of two, means I wouldn't be surprised by any prediction for next January. I agree with Rana that some variation on a Green New Deal is a no-brainer. It's more a question of how it's done. Is it done, through having a steep and escalating carbon tax that maybe can be revenue neutral because we would abolish the payroll tax? In other words, we would be taxing something bad, carbon, and removing all taxes on something good, jobs. That kind of radical restructuring of federal fiscal policy for good ends is, I think, possible in a situation like this. But as I've said before, with the re-election of Trump, it would be inconceivable.
So this is kind of a yes or no to both of you, because it's coming from a question. Do you think a tax increase on the wealthy is also a no-brainer?
Yes, absolutely yes. And I'm talking against my own book here, but as they say on Wall Street, but yeah, you just look at the pie, right? The economy is made up of the public sector, the private sector, and labor. We are at a point now in terms of post-World War II history where the private sector has more wealth than it ever has. The labor sector is more depressed than it ever has been. Government, which was already sort of beleaguered before coronavirus, is now taking on just kind of mind-boggling amounts of debt. So you really only have two ways that you can manage that situation. You can raise taxes and get some more coming into government coffers that way, or you can print money and you can use central banks, particularly in the US, with the dollar being global reserve, you can use central banks to backstop what the Treasury is doing and fiscal spending programs. I think you're going to end up with a mixture of both, but I think you've got to have some tax hikes, both because I personally think that kind of long-term money printing, even in a deflationary environment, is dangerous for reasons I can go into, but also because moral hazard, you need buy-in. There needs to be a sense that, we're all in this together, in the same way that I go out in my neighborhood and everyone's wearing a mask. It's less about, transmitting. I mean, it is about transmitting the virus, but it's also about saying we're in this together. It's about building community. It's about saying this is a public health problem and we're gonna be in it together. That's what you need economically. You need a sense that the capital gains rate that allows billionaires to get richer on their investments is not so much lower than the taxes that average people pay on their incomes. You need a sense that the wealthiest corporations can't offshore and end up paying nearly zero. That really is a no-brainer, not only for the economy, but I think for protecting liberal democracy.
And you think the politics are lining up to make this a policy no-brainer?
Yes, I don't think they'll line up quite sufficiently to get a wealth tax through. Remember the 2 cents wealth tax that Warren was campaigning on, of over $50 million. I don't think we're going to get to wealth tax because, however big, let's say Biden won big in November, he would need more than 60, or at least 60 in the Senate, Democrats in the Senate, to be able to stop a Republican filibuster. And even if he had 60, there's bound to be a few Democrats who are opposed to a wealth tax. So I don't think you're going to get a wealth tax, but I would agree with Rana. Equalization of capital gains with income is, I think, highly likely. I think a higher rate on inheritance, on estate taxes, is likely. I think that, and I very much hope that a scrapping of the tax breaks on debt and leverage would be a part of this. I mean, as you know, a lot of the companies that are getting really unconditional aid from the Fed is doing whatever it takes. The big companies that are getting credit, to the tune that they wish, with no conditions attached, were companies that were highly leveraged before COVID-19 in many cases. Look at the airlines, for example. They weren't using the good years before 2020 to build strong financial cushions and robust balance sheets. They were using it to borrow money to then buy back shares and pay out dividends. They were using it for the most short term.
How about financial transactions?
Well, maybe Rana should answer that.
Well, M&A was at a record level before COVID hit. Share buybacks were at a record level. This is all about financial engineering. I mean, going back again, the big shift in the 1980s onward was to use financial engineering, use run-ups in asset prices to kind of manipulate balance sheets. That's why you see a lot of these giant former great industrial companies like GE or like Boeing now just going bust or completely beleaguered, because they turned to balance sheet manipulation to create a kind of a sugar high of growth, a kind of a saccharine growth that really wasn't growth at all. It was just a run up in share prices. Now I think that you're going to see people really coming back to basics. It might not seem like that right now because we're still in this bizarre universe where we know we're going into a major, probably long-term recession, if not depression, and yet share prices are still way up here. That's about this sort of suspended belief that, the Fed can keep pushing asset prices up indefinitely. I personally think that at some point reality and the financial markets collide. And I think that you're going to see that happen. Actually, one of the periods in history I've been really, really studying from a market standpoint is the period between 1918 and 1932. It's very, very similar. If you sort of pin 1918 and 2008 together, you see there had been a downturn. The Fed cut interest rates. There was a debt-driven market bubble, and so asset prices went up for about 10 years. But again, it was masking increasing amounts of debt, increasing vulnerability in the economy, and then eventually you see a crash. And what's interesting is after the big collapse in 1929 of the markets, it goes down, but then it kind of goes up again, because people want to believe. It's really hard to change an economic paradigm. I mean, behaviors get really deeply imprinted. If you go back to the greatest generation, the Great Depression era, these people still use a tea bag 10 times. This is how they grew up. Baby boomers, they're willing to take on second mortgages even when they're retired. They have optimism. That's how they were imprinted. So it takes a while for people's paradigm to change. But I think that eventually there will be this kind of understanding that, whoa, we're in a whole new world. I think markets will then continue to go down. I think that'll happen more sharply if Trump is reelected. And then it will be up to policymakers to decide what kind of future we want to have.
So speaking about the future, I want to get your prediction hats on. Ed, let's start with you. One question with three parts. I think we're all in agreement that some type of change is coming, and it depends who wins. So name one change that you think happens for sure if Biden wins, one change if Trump wins, one no matter who wins. And I'd really like both of you to address specifically, because this is also a big issue in the U.S.-Greece relationship, U.S. policy on China, both in terms of geopolitics. Rana, you've written a lot about the decoupling of the U.S. and Chinese economies. But Ed, let's kick off with you.
One change if Biden happens. Look, I mean, the moment Biden were elected, if he were elected, there would be, without him having to sneeze or open his mouth, there would be a standing ovation from most of America's allies. I suspect there would be more mixed feelings in China. And I believe there is a debate in China as to whether Trump's re-election suits China's interests, because it's been 3 bumper years for them, or doesn't. But I think in terms of a transatlantic feeling, there would be an instant standing ovation. One thing that would happen if Trump were re-elected, well, I think it would be the end of the West. And so I think it wouldn't take long for NATO to disintegrate. You've already got China and Russia making great inroads into Europe. Italy, Greece, the group of 16 plus one in Central Europe. I think that the end of NATO would probably be one consequence of Trump's re-election. What was your third prediction?
Something that's going to change no matter who gets elected.
Well, whether the pandemic's over or not, I'm going to be either publicly or on the sly getting a professional haircut. This just can't go on. That's going to happen in 2021.
He's doing a great job, Ed. I think you look really good.
I will pass that on to Neve. Thank you. And John is doing a fine job on your hair, Rana.
Thank you. Okay, so am I up on future predictions?
Yes, Rana. Yeah.
Okay. If Biden is elected, I think that you're going to see, I won't call it industrial policy yet, but you're going to see a national competitiveness strategy. I think that you're going to see, for the first time in a number of decades, the government getting more actively involved in how the economy works. The only question will be how that's done, how well it's done. There are different camps, as I say, within the Democratic Party that want different things. And they want to pay for them in different ways. So that's going to be interesting to see. One thing I actually find reassuring is that Biden has a small team, and there's still a lot of questions around what kind of economic strategy he would have. But right now, I see a lot of people from different camps under the tent. I think that's a good thing right now. I think I would be much more worried if there were sort of clear, very, very clear, yes, we're going to do this. Yes, this is exactly how we're going to pay for it. We are in such a period of flux right now. What I want to see is the smartest people from all the different sides coming together and having him be a kind of a stabilizing, reassuring, organizing force to really kind of draw out the best ideas and all the stakeholders. So that's Biden. If Trump is elected, wow, collapse of the West. It's hard to top Ed's prediction, but I'll say major market crash. And that may seem counterintuitive, right? Because Trump is supposed to be the president that the markets love. He has been the president that the markets love. But really, the markets love the Fed. That's what the markets love. They loved the Fed before Trump. They always loved the Fed. I think that what's going to happen is that this way in which the Fed is becoming more and more politicized and Fed policy is becoming more politicized, and there's a sense that the Fed and Treasury are working much more closely together. I think rather than seeing that as a positive thing in a Trump administration, markets would probably see that as a negative thing, because they would see, we're not going to get any real change. We're not going to get a shift in tax policy, in industrial policy, in real deep thinking about the kind of neoliberal economic paradigm and where we go next. We're just going to get more of the same. And I think we're tapped out on that old, blow up asset prices, use debt to create growth, or use debt to paper over the problems of more debt. So I think you'll see a big correction. What would happen no matter who's in charge? More tensions with China. I think that the one world, two systems problem remains no matter who's in charge. I've been really interested to see how much overlap, in fact, there is. If you put aside the really ugly nationalism of the Trump administration, there's a lot of overlap between what Democrats and Republicans worry about in terms of China. And some of the worries are legitimate. How do you manage a free trade system when you have the world's second largest economy that really doesn't play by the same rules? How do you manage in a world in which there's tech nationalism and there may be entirely different systems of regulation? You've got a surveillance state in China. You've got kind of no holds barred, laissez-faire in the US still in terms of how tech companies can operate and how the digital economy is run. In Europe, you have the state kind of trying to create more of a role for the public sector, but that's unclear. Europe doesn't have its own tech giants. So you've got this very split world. And Europe in particular, and countries like Greece actually, I think could get really squeezed in a kind of a pincher-like action in the middle there, because already you've got the US and China saying, okay, pick sides. Are you going to use Qualcomm equipment or are you going to use Huawei equipment? Who's going to build out your 5G? Which side are you on? And I think Europe's in a really tight spot there.
So decoupling with China, no matter what, tensions with China, no matter what. Do you both agree that the post-dollar world is coming, no matter what? Ed?
At some point, it will come. The question is not really if, but when, how quickly this takes. History tells you that currency primacy, that the reserve currency, tends to be a lagging indicator. So with Britain's power had really gone before, but then, of course, during the First World War. But it took several more years for sterling to cease to be the global reserve currency. In fact, Germany and the United States had overtaken the size of Britain's economy in the 1870s. Sterling lasted another 40 years. I think that Rana's right, though, that the great sort of game, if you like, of the post-virus world and the current virus world is the US-China. And what worries me about that, and what I think puts the dollar in jeopardy, in more imminent jeopardy than it might otherwise have been in, is that you have a declining power, the United States, and a rising power, China, which throughout history has always been a moment of danger. This is the Delphi Forum. Thucydides is, of course, a well-known ancient Greek thinker. That in any circumstance is going to pose moments of danger. But what we have is something far worse, which is an America led by a leader that has no wish to shore up America's alliances, and a China led by a leader, Xi Jinping, who's very brittle, very, very nervous of his own power, very worried about his domestic legitimacy. Has just taken a very rash step on Hong Kong. He's sort of doubling down there and introducing Chinese state security law into Hong Kong. So you've got two very raw, very brittle and paranoid leaders at a stage of sort of massive geopolitical shifts that occur, once every 200-300 years, of a declining great power and a rising one. And so the scope there for accident, for mishap, and or worse, is very great, quite over and above all the sort of bilateral issues that Rana's just listed with tech nationalism and so forth. And the dollar could very, very quickly become a victim of that if America misplays, if America overcalculates its power in this situation.
Yeah, I'll jump in and say there's two arguments about the post-dollar world. The argument that we won't move away from a dollar regime is that 80% of global commerce is done in dollars. You can't replace something with nothing. Nobody wants to do all their trade in renminbi. The euro, who knows what's going to happen to the euro? We're in the middle of a major crisis and turning point there, and we haven't really even spoken much about that. But so that's one argument, and that's the argument that the folks that would like more central bank action and money printing make. That look, we don't need to worry about inflation or kind of Weimar Republic style politics for the moment, because we're in a deflationary environment. Nothing's going to replace the dollar as a global reserve, and so we should just print money, use it to fund smart investment projects, and done deal. The other argument is that we're in a world in which almost everything is changing. I mean, China is trying to do more and more trade in renminbi. We may see a sort of a decoupling of the dollar oil peg, interestingly. I mean, you see the U.S., at least under the Trump administration, kind of pulling away from the Middle East. You see China moving in to fill that void. So that would be a mark against the dollar. If the euro survives and you really do get this kind of coming together of Europe, a kind of a United States of Europe, over COVID, over the rebuilding after this crisis, then the euro would strengthen. So you might not get kind of a single replacement for the dollar, but you would get a world in which a lot of things were moving you away from just a single currency regime. And finally, trust. I mean, to go back to that point that's underlying so much of what we've talked about, you can do almost anything with a strong currency and a strong government if you're considered credible. But once you're not considered credible, things fall apart very, very quickly. And I fear if we get Trump too, that may be the case.
Well, we've come to our time. I think we could go on for another hour. And I urge everybody who is interested in this analysis, keep reading Rana and Ed. Swamp Notes twice a week, as well as all their other columns. We mentioned Ed's better half, Neve, who in Delphic fashion did prophesize that I was going to have Ed at the Delphi Economic Forum, so that came true. And I think she has another prophecy that next year we're going to get both of you to come do a retrospective, a post-November what now for 2021. Thank you for joining us. Thanks, everybody, for tuning in. And thank you for the Delphi Economic Forum for hosting this great conversation.
Thanks so much, Endy.